I like it too, so I swiped it from him. So we've got a bullish wedge forming, and like the name implies, it implies that the market's likely direction is up. Why? Well, because look, the bulls are buying at higher and higher prices, but the bears are being forced to sell at higher and higher prices too, aren't they? Well, now look at this. The bears had a chance to keep selling down here, didn't they? But they didn't. They didn't sell at lower prices. So what does this mean? Well, you know what? It means the likely direction is up. A few more bars. What happens? The market has another opportunity to break through support, and what happens? It can't even get to the line. It finally makes a spike down, but look at that. It can't even break. So what do we have to say is going on here? Well, this is now developing into more of a pennant, or I'm sorry, more of what would be called an asymmetrical triangle, but it's forming into more of a triangle shape, right? But still, we're looking at the likely direction is up. Okay, so all the signs are there. Remember, I've gone on for 20 minutes here. The whole point of this is you've got to be open and ready and willing to think about what happens if I'm wrong. What will the market look like if I'm wrong? If resistance is not going to hold here, what's probably going to happen? Well, you'll probably start to see support come above the line, right? You'll see that the market just won't break through the resistance level. That probably means that prices are going to go higher. That's what that probably means. Well, look what happens. Support does what? It comes up, up, up. Now it's above the line. Now, an easier way of saying that is you're going to see a bullish wedge. That's what that means. Then the likely direction is up. Okay? That's what that means. And of course, we all know the punchline. Boom, the market breaks up. I mean, this really was a very big move. If you look at this, even from the breakout at the top here, 137 pips. Nice move, easy to grab some profits out of that. Let's take a look at the second area over here. I think I've done so many of these videos, I apologize. We'll take a look at a second area here. Now, this is a time when the resistance level actually held. You can see these two spikes here. Now, I'm not going to BS you and try and say, hey, look at this. You could have traded up here and up here. You know what? These are very difficult to trade. Spikes are very hard to trade because unless you're an aggressive trader and you go short right on the line, generally there's not a whole lot of chance to get in. Because when you look at this area on, say, a 15-minute bar, you'll see that there are very large bars because there's momentum in here. But these tell a very important story. And what they say is that the bulls are weak and the bears are strong. And if the bears are strong, then that means, hey, if price gets back up there inside of a few days, I like to use a week, so 5 days, 5 trading days, it's more than likely going to hold. That's what I think. Okay, but remember, I'm going to be on the lookout to see, well, hey, what if it doesn't? If the market, if resistance is not going to hold, what's that going to look like? Remember, we already talked about that over here. You're going to see a bullish wedge. You're going to see the market making a flag. You're going to see the market making a pennant. You're going to see triangles. But more importantly, you're going to see that the market just cannot break back down. That when the market tries to get back down through there, it holds. So, if we're looking at the market here, and we're seeing it spikes up, let's take a look at the market as it approaches the line again. So here we see the market making a move up. First thing you want to notice is that there's not a lot of momentum as the market comes up here. The momentum stops well short. Okay, this is about 97.14. We're down here at 96.80. That's a big range. So the momentum is stopping well short of the line. As it starts to push up, you notice that the market is not closing on the high. So we see the momentum is dying off. Now look what happens. 4, 8, 16 hours, the market cannot close above the line. Okay, this is where we can start to look for or even actively open up a trade. And either trade when the market comes up to this line. We can go down to our hourly bar and look for a particular type of pattern. This is where you're going to start to see your flag pattern come into play. And then we can trade the break on that. Okay, remember, breaking it down to if, then. So if I see a flag pattern, I'll wait for the breakout. If the market comes back up to this high, then I'll go short. Okay? If then. So let's take a look. If the market's going to hold here, we're going to see that the market is going to close off of the high. It's going to close below the line. We're not going to see higher lows.